U.S. job growth last month beat everybody's estimate, 292,000, much more than what the market expected. But the unemployment rate, while it stayed steady, the big thing was wages, guys. There was zero wage growth. And while we opened higher, we started to drift, and we started to drift until we got what you see on the screen, another massive sell-off moments into the close. Consequently, this is the worst beginning to a stock market any given year ever. So the big question is, are we at a bottom? How do we get to the bottom? Back with us, actually, we got a new panel. Danielle Booth is with us, David Nelson, and Chad Morganlander. Let me ask you first, David. Everyone's getting scathed. Everyone's getting hit. There's, no one can say, I'm doing okay. You're down 1,000 points the first week of the year. Yeah. What does it say for the rest of the year?
Gosh, I hope it doesn't continue. I think we have a dichotomy right now. You have like jobs versus GDP. That's really the issue. That was a pretty good jobs number today. I thought it was excellent. It was across the board gains in almost every sector of our economy. Yet GDP keeps dripping down. And I got to push this off. There's something going on. This China dynamic is very serious, and it's got to be dragging into our economy because a lot of CEOs have made very big bets in China. What if it isn't the next engine of growth?
Well, what if it isn't? Whatever happened, Chad, to America being the key engine of growth for the world?
Well, it was, and it used to be, but the reality is the percentage of GDP on a global basis of the United States is far lower than it used to be.
We peaked in like the 1950s for that.
Let me back this up with some math. 75% of global growth comes from the emerging markets, and that includes China. China has invested a tremendous amount of money fueling the global economy with this huge amount of debt that they have taken on. Now they're decelerating that debt, and now you're starting to see them devalue their currency. That is creating that dislocation within the equity markets, and that's having an effect within our equity markets and also within our economy.
So you guys both think this is more about China than America?
I do. I think from Apple to General Motors, they're investing over there.
It's an external.
Danielle, here's the thing, though. I thought the one glaring red flag from this morning's report was the jobs, or wages. There's just no wage growth. How come the GDP is not growing? People aren't making more money. I mean, it seems pretty simple to me. And then one of your guys at the Fed, I think John Williams, kind of spooks us in the middle of the day, committed to that 4 rate hikes. Why are they so committed to that when the data just doesn't support it?
They are, it's absolutely a mystery to me at this point, Charles. I'm going to have to beg to differ with Chad and David, because when you look underneath the hood of today's labor report, you understand why wages aren't growing. 3% of jobs that were created in December went to people in their prime earning years, 25 to 55 years old. All of the other jobs went to much younger people and older people rejoining the workforce. I call that part-time employment, and I think it goes a long ways to explaining this dichotomy that we're talking about between economic growth, GDP, and what you've seen with the labor numbers. I think it squares the circle very easily, and then you bring in China and this destruction of confidence, the $1 trillion that have been taken off of just the S&P 500 this week. This will get CEOs' attention.
It better. By the way, guys, on the New York Stock Exchange, 15 stocks closed at 52-week highs. 511 closed at 52-week lows. Thank you all very much for your expertise.